With capital, you can manage, prioritize, and plan for capital expenses. Capital helps decision makers and frontline managers communicate throughout the request, justification, review, and approval process. When companies negotiate long-term lease contracts, they might want to offer rent-free periods during the term of the lease contract as an incentive. Many companies structure lease contracts with an annual index, inflation rate, rather than according to the payment frequency, for example, monthly. This feature enables you to have an annual index rate increase that is not tied to the payment frequency. While not an accounting solution, Capital provides best practice, pre-built content such as drivers, KPIs, and dashboards, and the following capabilities, so your planning process supports compliance with IFRS 16 and US GAAP ASC 842. Planning from a lessee point of view. No distinction between operating leases and financial leases. All leases are captured in the balance sheet, except those of low value or tenure. Rent-free periods that can be included for lease assets. An index rate basis of annual or payment frequency for leased assets. All lease asset depreciation is supported, provided calculations handle the ownership transfer conditions for depreciation. Lease assets are indexed to allow for inflation, and low-value and tenure lease assets that you define as assumptions don't need to be capitalized and can be captured in profit and loss. You can also plan lease capital assets using the out-of-the-box 13-period calendar. To get started, select support for IFRS 16 standard when you configure your application. This updates the lease calculation rule with IFRS 16 logic. Add assets to the appropriate asset class. You can select any asset class, but here we choose Capital Leased Assets, then refresh the database. Define your planning and forecasting frequency and granularity to include the time period in which lease payments and depreciation will be populated. Next, define or modify assumptions such as cash flow and funding, depreciation and amortization, and other expense assumptions that drive calculations using the built-in formulas. Here you can identify assets with low-value lease terms and values that are charged to profit and loss. Then you can add, modify, remove, convert, and calculate assets. Let's explore some sample ownership use cases. When ownership of an asset stays with a lessor, assets are capitalized in the balance sheet with a net present value of the lease payment. If the lease term is less than the useful life, depreciation is charged at lease term. If the lease term is greater than the useful life, depreciation is charged at the useful life of the asset. Depreciation is calculated based on whichever is lower between the lease term or useful life, since asset ownership is with the lessor. If ownership will be transferred to the lessee, assets are capitalized with the net present value of the lease payment, and depreciation is always charged at the useful life. For a low tenure lease, such as leasing a forklift for less than 12 months, the lease is charged to profit and loss. For a low-value lease, such as laptops costing less than $5,000, the lease is charged to profit and loss. You can apply indexation to assets for use in calculations that determine asset value. When you add an asset, you'll specify information such as lease term, payment frequency and timing, interest rate, index rate to include inflation, and ownership after lease term. If you set an index rate, the next period's lease is based on the index of the previous period's lease, which allows for inflation. The Calculate Leased Assets business rule takes the index rate amount into account when calculating the net present value of assets. If you don't set the index rate, the lease payments are the same across periods. On the balance sheet, leased assets are calculated as follows. Depreciation is calculated based on the ownership of the lease. Lease payments and net present value are calculated, and lease asset and liability are calculated. To learn more, visit docs.oracle.com.